We're starting to see a very different scenario playing out in South Africa when it comes to credit extension. Consumers are starting to become more cautious, but it seems that banks are also following suit. So it's almost like a cat and mouse game. Are we ever going to go back to the heydays of double-digit credit extension growth?
Absolutely. I think that where we've come from at the moment is that we had unexpected high growth in Q1, muted growth in Q2. Our outlook for the rest of the year is certainly muted. We've seen credit extension pulling back from 6.6% down to 5.2% last month, and credit card growth quarter on quarter up 1.8%. In the credit card space, we're certainly seeing some shimmer of hope, slight uptick in day-to-day spending.
Day-to-day spending, yes, you're talking about that increasing only by 1.1% quarter on quarter. During the heydays, what kind of numbers were we looking at? And again, can we get back to those figures?
Absolutely. So we had massive growth in balances as well as turnover. Our outlook is muted. We do not expect that we will get back to those double-digit growth figures in a hurry. However, everything is cyclical, and once we're through this cycle of the economy, we do expect that we're going to start returning. What we have seen is, while customers are reducing their balances, they're starting to spend more responsibly. So while spend is growing in double-digit figures, the amount of debt that people are keeping on their credit cards on a month-to-month basis is only growing by 1.8%, which is promising.
Household disposable income growth cooling to 4.1% quarter on quarter from 5.4% quarter on quarter.
Yes.
This kind of cooling obviously then impacts directly at the credit numbers that we can expect going forward.
Absolutely, and there are a number of factors around household demand, running from unemployment, high inflation figures, all working together and contributing to a bit of cooling towards the second half of the year. Our outlook is certainly not that we expect high growth.
Well, we talk about slowing in durable goods spending, and that came in at 12.5% from 21.5% quarter on quarter in, of course, the first quarter of this year. So yes, downwards revision, but it's still sitting in double digits, and that's quite strong.
It is sitting in double digits. We've seen traditionally high durable income growth. Where we've seen growth tapering off is in the largest sector of spend, which is in services, and we've seen a decrease from 1.9% to 0.7%. So dramatic reduction from 21.5 to 12 on durables. Our outlook is that it will moderate, but still continue growing fairly strongly.
Household debt to disposable income, I know last year was sitting around 78%, and now we're sitting at just under 76%. That is quite promising, but can we get that number lower? Are you expecting a further improvement?
We are expecting that to continue to edge slightly lower off the back of a structurally low interest rate environment. However, we're not anticipating a precipitous drop. So we've come off in north of 80% household debt to disposable income about 18 months ago, and it's gradually ticked down. We're anticipating it will continue, but not precipitously.
Looking at the growth rate in the country, we're sitting at around 3% forecast for the whole year. That's down from very close to around 4% at the beginning of what we thought was going to be a very strong year. How's this going to affect secured and unsecured credit extension? Do you think that we can have more risk of default and impairments down the line? We know that we experienced that in 2008. Could we see a resurgence?
We've seen a dramatic drop-off industry-wide in secured advances, secured credit extension. We did see an uptick in the corporate sector credit extension industry-wide. Where we've seen growth is in the unsecured lending portfolios. In Standard Bank, our bad debt profiles have dramatically improved. We've come down from a credit loss ratio of over 10% to 2.5% to 3%. What we're finding is customers have learned from the 2008 crisis. They're starting to deleverage. They're reducing their exposure to debt, and we will be continuing to watch these numbers day on day.
Okay, from the bank side and the National Credit Act impact that we saw when it was implemented in June 2007, would you say that it's been net positive, that we've actually started to move away from the weaker consumers, or do you think that it's actually dampened the scenario in the country so extensively that we are going to start dampening growth because of it?
Ultimately, the large banks typically give access to credit based very much on stringent credit criteria. So we've consistently followed a very stringent credit granting policy where you might might see a slight change is on the fringes in the smaller markets. However, we've continued to extend credit at a fairly consistent and very frugal and conservative level.